going to be in the middle of me talking right now. So it's going to look really awkward for the viewer because we just went live and I'm in the middle of explaining to these guys, hey, I'm just going to click go live. Welcome. Let us know where you're from in the comments. Make sure you can see us and this is working. I see 0 viewers, but I'm pretty sure there's more than 0. This thing is usually a little late to count the viewers. So cool. Welcome, Matt. Matt Smith from Good Soil. Noah Sargent. Did I pronounce your last name correctly?
That's correct.
Noah? Perfect. Community forum member. He's part of our cool little community, Patreon or YouTube supporter. So thank you very much, Noah, for your support. And obviously thank you to everybody who's been watching the channel, supporting the channel. Cool. Matt, welcome back, man. Good to see you again. How you been?
Thanks so much. I've been really, really good. I think you've had a string of kind of like absolute home run interviews this week. You know, you had Gary and Alexandra, and then you had Chuck Cook and James Dauma. And so welcome everyone to probably the most disappointing Farzad podcast or YouTube video of the week.
Yeah, I might be in agreement with there. You hit some big hitters this week, and I still need to catch up on your last one. But yeah, I'm excited for this conversation, and hopefully
every once in a while, you got to lower the bar, right?
You guys are crazy, man. You guys are not giving yourselves enough credit, man. Get out of here. Every single one of these conversations I love. It's going to be a great conversation. Yeah, you guys are crazy. But thank you, dude. I actually had so much. I felt like such a observer for those two conversations, because what I noticed was for the first one with Gary and Alexandra, they both are so well spoken and they can just talk intelligently for what seems like hours about anything. And I'm just like, listen, I'm like, holy shit, I'm learning so much, and I barely had to do anything. So I'm like, how do I get to benefit from this thing where I can just sit and watch two people talk? And then the same exact thing happened yesterday with James and Chuck, and I'm just sitting there. I'm like, man, like, this is incredible. I think that's what's really cool about having that sort of dynamic with more than just like two people. Like I really enjoy those as well, but it's very interesting having two different people that are very well versed on the topics and almost having like a self-moderating debate where I barely have to do really anything. I'm just listening very intently to see, okay, where do I maybe need to push the conversation? Where do we need more clarification? But I'm finding out that if you just have two people that are very intelligent, they just know how to talk. You just sit there and listen like everybody else.
For sure.
So I don't even know if I deserve the credit, to be honest. It's just it's the folks that came on, you know, honestly.
I think you definitely do, because from a host's perspective, not everybody knows how to give and take like that. They try to make it about them, right? And it's not about you. It's about the conversation. And you do that really well as you make it about that conversation.
Yeah, I would agree. Like, I think the thing that is a huge credit to you is you didn't step on the conversation. Like, you know, every once in a while you kind of poked in, but you let the conversation flow in a way that I thought was really intelligent. So, no, those were just great. Although when I saw the James Dauma Chuck Cook one drop yesterday, I was like, 2.5 hours, and I've got to watch this. Like, not only because I'm coming on your channel, but just I was like, this is like really interesting information, and like those two together is just like magic. So it was really good.
Yeah, man. Yeah, those two are great. The one thing that I've been struggling to find time to do sometimes, because it's just kind of like tedious, is creating chapters for these things. Because I wish there was a better way when you do a live stream or even when you record something. So, because it's hard for me to sit down and like, oh, this is a chapter. Like, I want to be engaged into the conversation, right? So I got to go back, rewatch the whole thing, and make sure that the chapter is going at the right time. I was thinking about doing clips. I was doing clips before of like taking like little snippets and throwing them up for people to see. That might draw them into like the fuller conversation to save them time. But I still haven't decided how to do that, because I did it before. It's just, but it didn't seem like it was too helpful for a lot of people. It seemed like it was more effort than whatever value it was creating. So I'm like, you know, I don't know.
You might even ask the community if, you know, someone who's an avid listener or watcher like wants to do that, send it your way. Patron,
I would love that.
You know, on Discord, something like that, you know. Hint, anybody out there, hit up Farzad.
Or just like literally just you guys can create the channel and just do it yourself. Like, I don't have to get the credit for it. If you all find that it's helpful to take a piece of my conversations and post it as your own, I don't care. Like, it's as long as it's helpful for the community, whatever. You know,
I have seen on a couple channels, like somebody will just post in the comments, like, because for YouTube, all you have to do is type like the timestamp and then a title. So if anybody watching wanted to timestamp these, I'm sure then Farzad could go and adjust it in the description, and that would make it work automatically. So maybe just crowdsource the chapters. That's probably a good idea.
Yeah, that would help as well.
Someone's gonna create a highlight of all the awkward moments of today. Like, we don't know the answer to that one.
That's fine too.
Or like
So it's entertaining. Who
those
cares?
Ping trip videos. Have you ever seen those? Like there was one with Jordan Peterson like ripping into Lex Friedman, telling him what an idiot he was recently.
Yeah.
He just like edits this all out of context. It's really, really well done. He's done a bunch with Joe Rogan too. It's
Yeah,
those are
it's
gold.
good. I definitely want to give a shout out to Alexandra. Obviously, she was one of our guests this week. Popular member of our community. It has been blowing up like crazy here lately in the last couple of weeks. She's putting a lot of heat on S&P and Moody's, and it's bringing a lot of attention to that, which is great. And I also want to give a big shout out to Kathy K. Kathy K was she donated $100 on the first stream with Gary and Alexandra, and she said for Gary's new mic. So we actually used that $100 and we got Gary some equipment. So thank you, Kathy. Thank you. The reason why Gary sounded good on the last one is because of you. So thank you very much.
It's funny. Like
that.
a year and a half ago, I actually had an interview lined up with Gary. I think it was the first one he might have ever done on YouTube, and we just had to cancel it because he didn't even have any camera whatsoever, like not even like a built-in webcam or anything like that. And I was like, how is this possible? So we scheduled it a couple days later. So Gary's got a long and storied history of technical issues. But it's great to see Alexandra on here too, blowing up. I mean, I've been a fan of hers for months, or if not like a year, probably. She was posting these, ARK Invest, things for a long time, and the way that she had formatted it was, I just thought really, really good. And so I was like, I never understand why she doesn't have any followers. And then of course, like now she just blows up and is like a huge, kind of rising star. And it's great to see people kind of get the credit like that they that they deserve. And there's a couple other accounts too that I've been noticing lately. I'm like, how do you only have 200 followers? I think there's probably more to be done on that front, and we're gonna, I think, try to host a couple on Good Soil pretty soon.
Nice. That'd be awesome. I'm getting a comment on the comment section that says my audio and video is a bit off. Matt, is it just you that's seeing that? No, are you seeing a delay between my voice and my microphone as well?
I am seeing you out of sync myself. Yeah.
Okay, cool. So this is what I'm gonna do. So maybe Matt talk about, or here, do this now. I'm gonna step away for 30 seconds. I think I know what the issue is now that I looked at something on the side. Maybe we can kick it off with the markets and how they're performing. Once I'm back, I'll throw up the chart. So maybe Matt, talk us through what you're seeing in the markets for the last couple of days, and y'all can carry the conversation for 30 seconds, and I'll be back very, very shortly. Go for it.
Yeah, I mean, clearly this week in particular, we've seen a pretty nice reversal of the losses that we'd had the last 2 weeks. Really, it's not completely clear to me what's driving that. I mean, that there definitely has been some very good news on the Ukrainian front. It's possible that that's lifting expectations a little bit. I kind of think that there's going to be continued awareness or recognition that the inflationary forces, which is like public enemy number one for equity markets, that the inflation is coming down a bit. So I kind of think that that's probably the bigger issue. But I think just looking broadly across macro, whether it's Ukraine, whether it's prices, there's just a little bit more optimism than we had seen. I also kind of thought the sell-off that we saw in August was a little bit overdone. I've seen a couple charts lately of just like an extreme amount of both shorts and puts that have come into the market. So like comparable to levels seen during the 2008 recession, if you kind of adjust it for market cap basis of the overall market by then. And to me, that's just like a pretty clear signal that like we're at kind of maximum hedging levels. And so to the extent people either exit their shorts or put some of the cash that they may have sidelined back into the market, I think that could be a source of kind of continued rise. So we may just be at the beginning of that, but I've never claimed to be a macro expert. Just kind of my observations from tracking this stuff pretty closely for the last couple of months. I don't know if Noah, you have any thoughts?
Well, what's interesting when we talked in the pre-show that I come from not a financial background, and so I am happy to represent the newbie in this scenario and in this conversation, and just ask the nuanced questions that people may not know. And one of them I had was actually around options trading. So Matt, do you know, like, since the price has gone, since the stock split, I should say, does that also mean that options trading generally is a third of the price that it was prior to the split?
Yeah, so I mean, the mechanics of options are just the same as holding equity. So you get 3 times the number of contracts, but each strike price is 1/3 the previous strike price. So it really doesn't change anything at all from that standpoint.
Okay, cool. So the cost, like for the same amount dollar value, like it's not like a percentage change or anything. It's like
Yeah,
just the contract number is different, and it's also a third of the price.
right.
So
Yeah.
it's like equally. Okay, cool, interesting.
What I find interesting about the recent price movements is that so I heard your comment about Ukraine while I was sort of actually let me ask this question. Is my audio better now? Am I more synced, or is it still a problem?
It
I think you're
looks a bit off
close.
still.
You're like
Still a
two
little bit
frames off
off?
instead of like 6.
Okay. All right. I'll take that. Maybe
I
StreamYard
think it's pretty
is having
good.
an issue today. Okay.
Yeah.
What I'm finding interesting is on the there was a Twitter space this morning that I joined. I think Matt, you were in it as well. I can't remember if it was you or Emmett, but they were talking about Ukraine. I think Bradford
Yeah, I was in that
Ferguson
one. Yeah.
in that one. Yeah, and so I'm curious how much of that is public knowledge. Is that something just that's within our circle that we're understanding that could be part of what's driving the stock price further, or is this a more well-known thing that Russia is actually they seem like they are it seems like the war is trending towards a place where there's going to be some sort of ceasefire or pause. How do you view that?
Yeah, so maybe just like I think the key development that happened yesterday, and actually, like, I'm not an expert on this. I've just been kind of listening to people who like truly understand this in detail. But the big kind of development that happened over the last couple of days is there's been this Ukrainian counteroffensive, and it's pretty clear that they either have or they are days away from capturing like a very key Russian supply like depot. I don't know if it's a city or a railway or what, but that's going to essentially choke off all the supplies from Russia to the kind of frontline Russian troops. And so listening to the people who are more well versed than I speak about this, they were basically saying like the Russians don't really have any good options at this point, and they're also not like retreating in a way that seems to make strategic sense. So they were saying like these people are either going to just like end up as cannon fodder, and like apparently there was around 1,800 Russians who were killed just today. So like staggering kind of casualties that will make like the cost of the war just intolerable. So you may have like a big surrender of some amount of troops, or otherwise it may just become pretty clear that the Russians have gained the Ukrainians have really gained the upper hand. So I don't know to what extent that is, wide knowledge. I mean, I was looking a little bit this morning. I didn't see like in the Wall Street Journal or anything. It's possible I missed it. But I didn't see any like major outlets reporting on what I think is like really significant news on this front. So it's possible that it's like a version of what we saw in the Tesla community, where like there's this small group of people that really understand what's going on way before the rest of the world. And I don't want to like pat ourselves on the back too much, but to me, it seems more likely that it's kind of that dynamic rather than like wide recognition of exactly what's going on and kind of probabilities of Ukraine winning and that sort of thing.
Interesting. Go ahead, Noah.
I just might be ignorant on this whole topic, but obviously there's the world pressures and world economics that are sitting on top of Russia, with embargoes and the things that they're dealing with. So I just feel like a coup is inevitable. Like if there isn't some sort of bigger war, and allies being formed and what have you. So, but yeah, it's definitely pressuring Russia, but it's really affecting everybody globally as well.
Yeah.
Well, I mean, on that front, there was one thing I heard on the stream while I was listening to it today that I thought was pretty eye opening. And my numbers were probably a little bit off here, but they said something to the extent of Russia had like hoarded $300 billion worth of like currency reserves in order to kind of weather the sanctions storm. And just in 6 months or whatever it's been since they started the fighting, they've burned through 100 billion of that. So you could imagine if this, goes on another, year, then like there's really nothing left to kind of prop up the economy there and kind of protect the ruble from devaluation and that sort of thing. So, I think Russia has done a pretty good job shielding the populace from both like the truth about what's going on, like on the front lines, but also like from the economic impacts of the sanctions. And I mean, even just like a month ago, the narrative was that like Europe is completely beholden to Russia on the energy front. So like Germany's going to cave and like they're going to just really increase the amount of payments going to Russia. And like Russia, the ruble had been strengthening. And so it looked like Putin was kind of making a fool of these European leaders. And, fast forward a month, and it seems like that kind of narrative is actually starting to crumble, which I wasn't really expecting, to be honest with you. Somebody in the comments was talking about the energy crisis, which is, looming in Europe, which I think is a very real consideration. But the like just this morning, there was like a record number of LNG tankers going to supply Europe. And I think there's really growing awareness among the populace in Europe that like they're going to have to make sacrifices, do some like kind of wartime rationing like you haven't seen since World War II, really. But I think I'd be curious, in the comments, if there's any of our, listeners or watchers who are from Europe, what's the kind of sense on the ground? Because to me, the things I've been hearing are that like people understand, and it's like kind of a national pride sort of thing that, they're going to need to kind of wean themselves off of Russian fuel, at least for right now. So I'm very curious to see how this pans out, because it could be a total disaster, especially if the winter is particularly cold. But I think it maybe is not as dire as maybe some of the loudest voices have made it sound.
Yeah, we've been getting flux alerts here in California, and we've had a heat wave here. It's been really detrimental to a lot of communities, and I haven't heard of any sort of rolling blackouts yet. But I think obviously with the history of Texas and other places in the U.S. and obviously in the world too, it's just becoming more and more important to go green and have solar and to have battery backups, power options and stuff. And so I don't know. I think people and the world in general are taking these kind of options more seriously now. It's like less of a like cloud dreaming kind of solution of like high in the sky, one day it'll happen, to like, oh, this is something we need now, and we need to figure out this energy solution, whether it's, Russian imports from oil and gas or just solar locally here.
So I pulled up a chart. So we were talking about sort of the topic of the Russian ruble came out and its performance versus the USD. And then I'm just out of curiosity, I was wondering how I was trying to see if this kind of gives a signal of how maybe the world is viewing Russia's economic strength versus the rest of it. And I don't know if this is a good way of looking at it, but you can see that so right around when the war started, which was around February or March of this year, the ruble went down a lot, and then it had a huge spike up towards the current levels now. So what was it? So it went all the way down to 0.0091 rubles to the dollar. Then it spiked up to 0.019 rubles to the dollar in June 29, and then it sort of came down and flattened out a little bit. So I'm just curious, like if we were to see some true crises in Russia when it comes to their economy and how the war is impacting them, would we see and I don't know if this is a question for I'm just kind of throwing it out there. I'm curious to see if anybody would know this. Would we see a decline in this graph, and would this give us a signal that says that, hey, or a confirmation that says, hey, what we're hearing about Russia and having a lot of struggles, would that be reflected in this chart here? How should I think about this chart at all? Matt, I don't know if you have an answer for this, but I'm just curious.
No, I mean, my takeaway is like you can see that the huge drop off that kind of happened in March, and like people just assumed that sanctions were going to take effect right away, and like Russia was kind of screwed just because of how serious those were. And then kind of to the commentary I was giving just a minute ago, what actually happened is that like European or the Russia's oil and gas exports really strengthened, and their economy was much more resilient to these sanctions than we had presumed would be the case. So you've seen a little bit of a drop off since, like the July peak, or maybe it was June. But to me, it seems like there's not a clear signal from the market that, like, there's broad recognition that Russia is losing the war, and they like face the potential of like a coup or a national default or something like that. So to me, what that indicates is that the market is not really pricing in, kind of really, really bad news for Russia. I'd be curious though, if you look up the MOEX exchange, MOEX. I haven't looked at that in a long time. I think it's like the broadest Russian equity index.
MOEX exchange.
I believe that's it. Yeah. It's an index technically. So like that second one, that Yahoo Finance one, I think would show you the chart. Yeah. So I don't know if you look at the year to date or something, what that would show us. But the trading on this was halted for a long time.
Okay. So there's year to date there. There's a daily candle.
Yeah, so it looks broadly similar to what we saw on the currency side. So just looking at these two charts, obviously it's not definitive, but to me it doesn't seem that the market is taking into account like the much higher probability that Ukraine is going to end up having a strategic victory in this war. So I don't know. I'm again no currency expert either, but they're in bad shape, I think.
Mm-hmm. Well, that's super interesting, and I think the core question, if I'm getting this right, is like, does fiat currency exchange track public sentiment, right? So like this exchange between one government's money and another government's money, fiat currency, right? Is that a good way of judging how the public is perceiving the situation? And obviously, there's other factors at play. Another interesting thing I've seen on other YouTube streams is there are lots of millionaires leaving Russia and China right now to go to other places. And so I wonder how that gets tracked in this whole situation as well.
Yeah. There's a lot of interesting, like this whole thing has been going on for what feels like forever. It's been like 7-8 months or so. And it's like this entire year has been, and of course, like the worst thing about this whole thing is people are dying by far. Like, and I want to make sure that's clear. And I know everybody agrees here. 100%. By far. What's interesting from at least my perspective is trying to see how the market reacts to these things, given that, especially since a lot of us are Tesla investors. Like my hope is that this thing just ends. It just stops so that people can stop dying and get back to their families and hopefully live a good life moving forward. What I do find interesting in the last few days is that we're still, like, we're seeing these rallies, and so that if we can go back to Tesla for a little bit, we're seeing these rallies in Tesla that are happening. So there was one little rally in July where we went from in 713, where we went from 237 post split up to what was it, 313, 314. Then we came down after Jackson Hole, and now we're seeing sort of this rebound, which we kind of theorized a little bit. I'm curious if in the next, so I'm thinking about the next few months for Tesla. It seems very exciting. We got Q3 delivery. Well, we got AI Day 2 end of this month. We have Q3 deliveries beginning of next month, so in about 4, like probably closer to 3.5 weeks. Then we have Q3 earnings, which are going to be, I think, they're going to surprise people. Say like the broader markets. And then we also have a potential changing in the language that the Fed is giving from an interest rate perspective. So like those 4 things I'm viewing as some pretty major catalysts for the stock moving forward. I'm curious to see if you guys think about it the same way, and if you have any comments around that. But I'm just very excited for these next 4 to 6 weeks. Like there's going to be a lot going on, and Twitter too. So we also could see Twitter either settle, which I still think they're going to, like, I'm seeing that as a likely possibility given the whole thing. I still think Twitter settles with Elon and they come up with a new price. So there's like 5 things right there in the next 4 to 6 weeks that could really help the stock move upwards. How do you guys think about that?
I think it's interesting around the U.S. And at least for me and my wife, we have a pre-order for a Model Y that was supposed to be here in like November, December, right before the $7,500 tax incentive is supposed to kick in. So I don't know if it was on this show or a different show, but basically, from what I heard from another channel, they're looking at boosting the local sales within China and doing less imports, into the U.S. So I'm curious too if the Austin factory and even Fremont, if they're considering, lowering local deliveries and looking at other exports as well. Because if the U.S. demand, I guess you can say, is temporarily slowed down until the first of the year, if they're going to kind of shift those around and because I still think they're going to deliver every car they make, and like even if I had to compromise, if like, all right, you get the car. Or you have to wait at the back of the line, I would take the car and not get the $7,500, credit or whatever. So I think that's one of the other factors that might be participating or contributing to this situation.
Yeah, I think the other possibly even more impactful thing in the short term is we have CPI print next week for August. So if that's another kind of surprise, I think it's Tuesday morning, but I think it's either Tuesday or Wednesday. I believe it is Tuesday though. You could probably look it up. But if that was another good print, then you may have a kind of rally similar to what we saw last month, where all of a sudden the probabilities that the markets are ascribing to like a 75 basis point hike will decrease a little bit. September 13th. So what day is that? Tuesday. Okay. And that would be, I think just a big boon potentially, or it could actually, I think it'll be volatile one way or another personally. It's just such an important thing. It's like I said, it's public enemy number one for the equity markets right now. So whether the news is good or bad, I do kind of expect it to move markets.
Real quick, I want to give Kathy, you're nuts. She just donated $100 to the stream. Thank you so much. Matt, Noah, if you guys are in Austin, drinks are on Kathy. How about that? Let's do that. Thank you, Kathy. That's so sweet of you. Seriously, thank you. But you're going to get us nice and drunk. Go ahead.
Yeah, so what was that? No, I didn't hear that.
Sorry, we can give Gary Black a webcam now.
Yeah, right?
He's got one. He did get one last year when he was doing that interview with me for the first time. But the other thing I was going to say, like, I really do think, and this is something that that Yaman's been really hammering home.
How dare you? I'm kidding. I'm teasing.
You guys are pretty much the same. But I do think the Q3 numbers are going to surprise. And this is something we're going to go over my earnings model on our Good Soil Investment stream next Tuesday. Nice. So we'll do like a deeper dive into that. We're still kind of refining some of our assumptions, but the more I've been kind of listening to the Uber bear case or the Uber bull case, and kind of digesting some of their points and trying to take away like the unbridled optimism and just say, okay, what are the nuggets of truth that I really think are likely to happen, not just kind of hope will happen. When I've kind of gone through that on some of these streams, and at the same time I've been listening to a couple bears, and like Brad Munchin's one of them who I interact with pretty frequently, got some decent points, but I'm putting all of it together, and I've had to raise my Q3 estimates pretty significantly from where they had been. So like I noticed even Gary Black, I think he's something at like $1.12 or something like that, and the market's at $1.06. And I'm thinking that the beat is going to be like very, very large, not like Yaman large with like 40% margins and anything like that. But I think that it has the potential to be a massive catalyst for Tesla, particularly.
So I'm pulling up.
So Gary's at 112.
Gary Black. Yeah, 112 versus 107 estimate. Sorry, Matt. Where do you think you're landing? Do you have the number ready yet, or you want to?
Yeah. Well, so I was Emmett and I were kind of going over it yesterday and like making some assumptions of like a kind of reasonable case, and then more like an Uber bull case that we still thought was somewhat reasonable. And so like the reasonable case I was coming up with was like around $1.59, and then our Uber bull case was like $1.79. So I was kind of joking with them, and I was like, split the difference here at 169, which, sometimes the most entertaining answer is the correct one. So we're going to refine that. I'm not completely sure like where the assumptions are, but I really think that the forward estimates in like 2023 in particular, if you look at where analysts are expecting that to be, in my mind, it's like ridiculously low. And then you've got Tesla Energy ramping, and you've got, FSD and whatever we might find out on AI Day. So, the point being, I think you've got like all these catalysts kind of stacking. And again, this is not like financial advice. I would especially advise people not to go and, say Tesla will double or triple in 2022. So I better go buy a bunch of like short-term call options. That's playing with fire. I would really recommend people don't do that. But I do think that, it's like weighing the good news versus the bad, or like the catalyst. I think it's like very heavily weighted towards the good. And the thing I love about Gary, sorry to go on a bit of a rant here, but I completely agree with the way that he looks at it. When you let's just take out like autonomy and like changes to FSD take rate.
Oh, Matt, we lost you, I think. Are you still there, buddy? Hello, 1, 2.
$500, somewhere in that range.
Matt, can you hear me, buddy?
Sorry. Yeah.
Can you hear me?
Yep.
Yeah, we lost you for like 10 seconds. So the thing you love about Gary is
his beautiful hair.
There you go.
No, I was gonna say,
what?
like,
I'm just kidding.
The thing I love about Gary is like he says like, let's just focus on like the car business, and when he does that, he's just saying like it's so undervalued by Wall Street. So I think his price target, correct me if I'm wrong, but I think it's something like $500 in the next 6 to 12 months.
550.
So 550, yeah. So he's basically saying like slightly less than double in the next 6 to 12 months, even if you exclude all the upside potential that we all believe in, or maybe that some of us believe in, on autonomy and Tesla bot and energy ramping and all those sorts of things. And I agree with him. Like when I'm looking at the numbers from like a conservative, just like Wall Street analyst point of view, and I don't adjust take rate, and I don't do anything super crazy, and I'm using like low multiples to account for macro risk, like I get where he's coming from, and I'm coming up with similar numbers. So that to me is what's exciting, is the fundamentals provide a backstop for valuation.
Do you tend to also have a 12-month evaluation, or do you also model out past 12 months?
Yeah, so I have two different models actually. One is like a very detailed discounted cash flow, like building up all parts of the business. Although Tesla bot, I haven't added to that yet. So yeah, that one is more like a share price calculation, of like looking out to 2030, say, and kind of making assumptions on robotaxis and FSD take rates, and those are like the big drivers. But then also a little bit for energy and some other things. So I've got that version. But then what I think is kind of more impactful for like the near term is like an earnings per share model. So I do model those out separately, and that one I think, because like if Tesla just keeps beating analyst estimates by like 30, 40, 50% every single quarter, like that, just if the stock doesn't move, that compresses the PE ratio down to like potentially ludicrous levels. So at some point the stock has to react and say, okay, maybe these crazy margins that Tesla is able to achieve are actually sustainable in some manner, and so then like the PE ratio has to increase. So that's kind of my belief, is that like PE ratio is going to drive stock price in the near term, and so then it just becomes a short-term execution story.
That's great. And then as far as your model that goes out further, do you factor in Tesla's expense for getting to 20 million vehicles if they do need to say 3, 4, 5 more factories, 6 more factories? Is that also part of your model, and how those continue, because capital expenses seem like they would be short-term when you're building a new factory, but really if they're continuously building for the next 10 years, it might be a more ongoing factor.
Yeah. So like I have an assumption. I think in my model, just like I don't want to give Tesla credit for their goals or their targets. So I think I assumed my first model was actually 12 million by 2020. But after this past year, and how well they've really executed, and frankly seeing the demand. I mean, that was maybe a bigger concern for me a year ago, but seeing how demand has just really, really accelerated this year. I increased my 2030 forecast to, I think it's like 16 million, something like that. So getting a lot closer to giving Tesla credit for the full 20 million. But yeah, then I added a. Oh, did I drop off again?
No, you're good. We'll see you.
I got to get a Starlink. Okay, you guys both froze for a second. Sorry. But like I've got a line essentially that has like the capex per unit of capacity. So then as you adjust your deliveries up or down, your capex will also adjust up or down. And there's like I think it's like a 4-month or a 4-quarter lead time that I built in there too, to kind of account for the fact that you're going to be building these well in advance of when the new vehicles come online.
Nice. That's helpful. Looks like we got a little bit of boost in the views. We have people coming from Yashu's stream. I believe he just ended his stream. So welcome in. Come on in, everybody. There was before we even say anything, if you haven't subscribed to Yashu's channel yet, please go subscribe to his channel. The guy has been trying to get to 20,000 subscribers for a while now, and I need to freaking send my people there to get him there. Please go subscribe to his channel. His channel is Hit That Bid. Here we go. Hit that bit. He has such great content. Awesome. It's so good. Right here. Boom. Look at this handsome guy. How could you not be subscribed to this guy? For real. Go subscribe to his channel. He's awesome. He's been on the show before. He does really, really good work. The one thing that I wanted to bring up as well that we were talking about, the deferred tax credit. So don't forget $1 billion in deferred tax credit they better use this year to avoid paying income tax for 2022. Is that how the mechanism works, Matt? Are you aware of this sort of thing that's going on with Tesla?
Yeah. So this is like an accounting like rabbit hole that I could spend 20 minutes kind of going into the details of, but I'll spare everyone. The short answer is I don't think this really matters. And the reason being is that it's purely an accounting mechanism. So like Tesla is not paying cash for taxes, although they will be presumably with this new kind of minimum tax that's being assessed as part of the Inflation Reduction Act. But this kind of $1 billion deferred tax credit that they're talking about, there's a difference between the taxes that Tesla has had to book on their income statements. So like if you look right now, I think they're paying like a 9% tax rate, and if you were to basically look at the amount of that's U.S. based, they're charging their income statement for like on an accounting basis, on a GAAP accounting basis, for income tax that they're not paying. And the reason that they're not paying that tax is because there's this concept called a net operating loss carry forward. So, from 2000, when was the company founded, 6 or whatever, all the way through like mid 2019, the company didn't have positive net income. So the tax rules in the United States allow you to carry forward that tax balance to offset future tax liabilities. And so right now we're in this stage where Tesla is profitable, but they're still able to kind of harvest those net operating loss carry forwards. However, like the way that those were accounted for back in 2019 is it was such a massive bucket of net operating losses relative to like a little tiny stream of profitability that they had at the time. So the like accounting treatment basically said that, okay, these NOL carry forwards, they're called, expire after, I think it might be like 15 years or something like that. And so they did the math at the time and said, okay, well, if this little stream of profitability, increases over time, you're actually only going to be able to use roughly half of the net operating loss carry forward. So the total amount was something like $2 billion, but they had like a valuation haircut to make it just $1 billion. And so that's the amount that was booked. So this $1 billion gain that we're talking about, it's just saying that, okay, we now think it's highly probable that we'll be able to use the full $2 billion of net operating losses that we have from our startup days. And so we're going to adjust our balance sheet to account for the fact that it's probable that we'll use these now. And so you have a one-time gain, but it doesn't change anything about your cash flows. It doesn't change anything about like the business. So in my mind, it's like a non-issue. Like it might really pop and make like a headline number on like CNN or something like that. But in my mind, it's a non-issue.
So is it sitting in the balance sheet? It just hasn't been recognized in the P&L. Is that the right way of thinking about it?
Yeah, it's a deferred tax asset, but there's like a valuation adjustment that they apply to it. And so,
Okay.
it's like a $2 billion asset that's adjusted down to 1 billion. And these numbers are probably not accurate. I haven't taken a look at this in a while, but so yeah,
But it
they're
doesn't change
just
the story. That's really the overarching story. Like there's no like something that comes up and it hits and it's all of a sudden, oh my God, there's $1 billion that appear out of nowhere. It's not really like that.
Yeah. It's like, it would be a different story if like there was a tax credit that they got that was $1 billion of cash added to their balance sheet or something like that. That should have a valuation impact. But when it's just like the only way you could make a slight argument that it should have a valuation impact is if in your like very detailed discounted cash flow model, you assumed that they wouldn't use all those net operating loss carry forwards. So you're like, essentially you're just adjusting your tax rate very slightly for like 4 years. And so it's like it's just a very modest impact. And it's mostly like, it's more noise in my mind than what we should be kind of focusing on.
Got it.
I had a question around that too, from a layman's term perspective, I should say. So my understanding is because Tesla operated at a loss for X amount of years in the beginning, they basically have some credit or deductions they can take. Is that an accurate way of looking at that?
Mm-hmm. Yeah. So essentially, like, just imagine it's your own personal finances, and you lost $100,000 last year. If you're a business, there's a rule that you can actually carry that forward. So if you make $100,000 next year, then you could actually offset that until you wouldn't pay taxes. That's kind of the mechanism.
Okay, cool. And is there a limit to how far back Tesla can go in that stop loss?
Yeah. So this is where the rules get very technical, and in my kind of knowledge, like I'm not a technical accountant, but my understanding from looking at similar kind of treatment of physical assets on like the utility side, like power plants, is that it's like roughly a 15-year life. And so that's why they would apply this valuation discount, because if you're not going to use $2 billion worth, if you're not going to generate $2 billion worth of net income in 15 years, then it wouldn't make sense to kind of book that full amount of the net operating loss carry forward.
For sure. And one last question, as far as full self-driving, my understanding is they're not counting that towards profit yet, but when they decide to do so, like when it's widely released or whenever they decide to do this, so then that's when they'll start converting that money into profit. Is that correct as well?
It's not entirely correct. So they are recognizing some of the revenue as profit. By my math, it's like around a little over 55% they're recognizing right now. So in the logic behind this kind of accounting rule, gosh, I did not think this was going to turn into like an accounting lecture. Sorry, everyone.
Please send donations to Matt Smith.
I am sticking by
we're gaining
comment at the beginning of this, that this is going to be your worst live stream of the week, Farzad, for sure.
Nope.
But so the rationale behind the accounting recognition of full self-driving revenues is that Tesla has not delivered all of the functionality that they promised to their customers. So let's say you bought full self-driving for $10,000 and you were promised automatic driving on city streets and like the highways and summon and all these things. Well, they've delivered autopilot on like the highway and navigate on autopilot. They've delivered recognition of traffic lights. They've delivered smart summon, but for the vast majority of US customers, they have not actually delivered full self-driving where it will actually just drive itself on city streets. So the interesting thing is, like, I assumed that last quarter with the beta program going out to 100,000 people, that they would recognize the full amount of full self-driving for those 100,000 drivers, but they didn't, interestingly. So I think it's probably, I think it's very likely that if it does go into wide release where every single US and Canadian purchaser of full self-driving gets the software, say in Q4, then I think they would have to recognize that deferred revenue balance at that point. So the interesting thing there is, like, I think so you could have like a $1 billion write-up on like earnings, and so like earnings per share could like really pop because you've got like this one-time item. And Gary Black's point, and I agree with him completely, is that the market is going to discount that because it's like a one-time recognition. But I also think where the market gets it wrong is that if it's true, like that $1 billion is real profitability that applied to previous quarters. So like you can't just only discount it. You have to adjust forward and say, okay, now I have to increase my profitability estimates for full self-driving because it's going to go from being 50% recognizable to 100%, at least in the US. And so that has very real kind of gross margin impacts that, do relate to earnings per share. So yeah, that's another, like most analysts are not looking into that level of detail. Adam, or who's the Piper Sandler analyst? Who's been on Rob Maurer's show. No, it's not Jonas. It's I can't remember his name, but he's the only one who's actually modeled this out in what I would call the correct level of detail. And he's getting to like some pretty interesting margin assumptions when he does that.
Thanks for going down this rabbit hole. It's exciting to learn about this kind of stuff.
Yeah, I like it's meaningful. Like if you don't understand that Tesla's profitability, even assuming full self-driving take rates don't change, but like, so just keep everything else equal, their profitability is going to increase next year just because of this one fact alone, that the full self-driving revenues will be more recognizable. And then on top of that, you've got I think a very likely scenario where take rates actually do increase because the software itself just gets so much better and the price increases are generating more revenue. So yeah, I'm mildly bullish, but I've been wrong on my predictions of like take rate going up before. So I'm kind of trying to be a little bit more cautious when I'm actually making my modeling assumptions around this.
Helpful. The name of the gentleman, I believe, Matt, is Alex Potter of the analyst.
That's right.
You were talking about. Yeah. Somebody asked me to throw up the chart while we were going through this. So I got to do this since Yashu does it. 298.30 sitting on Tesla right now. Juju Gang, there you go. There's my Yashu impersonation. Real
do you
quick,
have your blueberries ready, Farzad?
No, dude. I was half thinking about bringing some fruit on this just to. Because I saw Yashu was live as well while we, like a little bit before we were, and I was on a stream for a little bit. I'm like, damn, I should have brought some freaking blueberries. I also want to give a shout out to Emmett. Emmett, we got to have you back sometime, bro. I'll hit you up maybe in the next couple of weeks if you're available. I'd love to have you back. Matt's just better looking. I couldn't help myself. I'm kidding.
Fake news.
You're both stunning. You're both just studs. Awesome. So... yeah, that was really helpful, Matt, because I think the one thing that I keep seeing in the Tesla universe is, and in other places too, is like there are events that are coming up where some people think that once it's recognized, it's going to have material impact on the stock just for the sake of being recognized. But in reality, we have to view it from the perspective of, does it actually change the valuation of the company based on this recognition? Mm-hmm. And so the example you went through with the $1 billion on the take rate being recognized in previous quarters as well was a perfect example for me to say, okay, so that seems to me like a much more material impact than the tax, than the deferral of that tax and the NOL thing that you went through. So that was very helpful to understand. And you'll be pleased to know that our viewership has actually gone up since you started talking about that technical stuff. So maybe you got to keep going down that rabbit hole, bro.
I think it's all the likes that your lovely listeners are putting on here.
I do want to cover a piece of news that came out earlier today, or maybe it was, when was this broken? This morning. So Tesla, considering lithium refinery in Texas, seeks tax relief. So this sort of was tagged to the comment where Elon in the past said that this is essentially a money printing machine, that the lithium refining was one of the biggest bottlenecks for them to get to a state where they can have enough raw materials for their scaling of the batteries. Did you either of you guys see this news? Any thoughts, any reactions? Comment section, chat, feel free if you guys want to drop some nuggets there. But I found this interesting because this means that Tesla is getting into the they're getting closer and closer to the mining step. And I've long theorized that I do think Tesla is eventually going to be in that business, even though they've been open about saying they don't want to be part of it. But this is yet another step closer to that. Before refining, it comes the extraction of the materials, right? So any takes on this?
I think Elon has basically said he's going to backstop it, even though he really doesn't want to. And what I mean by that is like he's going to make sure it happens. Like he's trying to get other companies to support and be vendors and mine it themselves. But at some point, when push comes to shove, like he's going to put energy and resources towards making that happen. And then obviously politically it gets a little dicey when you're, digging up stuff and there's environmental challenges with that. And obviously it's creating another business or another line within Tesla or another company. But yeah, it's a whole nother can of worms that he's hoping to avoid. But I think, like you're saying, it's pretty much inevitable. I think just the way Tesla and Elon operates his companies, like it's going to need somebody like that who's going to spearhead that and really take it to the next level.
Yeah, like this is actually something that was not very well versed on what a big issue this was until we had Jordan Giesecke from Limiting Factor and Josh Isblon, who's another kind of great, lightly followed Tesla resource in the Twitter community. But we had the two of them on our channel with Emmett and had a really great kind of roundtable discussion of like, all right, if Tesla's actually going to scale to 20 million units, and the rest of the industry is trying to go EV2, like what does that imply just about like how much mining supply there is and like what are the different bottlenecks? And like I kind of had an uneducated mind, like, oh, they'll just like figure it out. Like they've been really great at executing. But like hearing Jordan's concern, who's following this much more closely and saying like, I don't see how they get to 20 million vehicles, given like the fact that there's no new factories being built, especially around the refining side of lithium. I think if my memory is correct, that was like his single biggest concern. Because like you've heard Elon say that like for the next 2 years, they're pretty much good. But that kind of implies, well, what about after that, right? And I think like that's the real concern is like 2025 to 2030. Like people are not putting in the amount of capex that seems like it would be needed to really scale the battery, the production of all the battery materials in a way that's meaningful. So that really kind of sobered me up a little bit, I think, about like even as like I mentioned my 16 million target for 2030. Well, maybe that's too aggressive then if you've got like just very real supply challenges that like there's just not enough ore being like mined and especially refined. So the fact that they're kind of getting ahead of this potentially, like I think this is very big news actually. Probably not from a valuation standpoint, but from like a long-term kind of like sustainable advantage standpoint, I think this is like a really good news that like we'll be seeing the rewards of this in 3 years' time and be like, oh wow, I'm sure glad they like thought to buy that refining company because wow, if you look at like the supply of lithium refining, like Ford can't get any and GM can't get any, and Tesla's like the only game in town. Yeah, so I think this is really important for that reason.
I think on the other side of it, like past 2030, maybe 2040, 2050 even, once we have enough materials out of the ground, right, it becomes a recycling factor, and Redwood Materials and other companies like that, even Tesla's recycling, that's going to be the more important thing. So I think there'll be a huge midterm, long-term push towards mining and refineries, and then over time it'll switch to a recycling-based system.
Mm-hmm. Yeah. I think the point you made about Ford and GM, so that's where my head goes to whenever Elon talks about not having enough supply or the refining processes. Is forget Tesla's ability to scale. What about the entire world? if Tesla's 20 million by 2030 is a jeopardy, I'm assuming that means that the rest of the company's targets to get to where they need to be is at even more jeopardy. Because the way I think about it is Tesla's going to be ahead of the curve when it comes to this sort of planning and supply chain and manufacturing. So, for example, GM just announced, that they just showed their new Silverado. Was it Silverado? No, I'm sorry. The SUV Equinox. I forget what the hell the name of it. The one that's made in Mexico. SUV competitor for the Model Y. It's a little bit cheaper. But okay, so 5 years from now, what is their unit volume target, and how does this piece of it play into that equation? And then when I try to sit down and think about this with, say, folks that are on the bear side or think that competition is definitely going to catch up, I wonder how many of these folks have like this article, like how many of these folks are looking at it from this perspective of the supply chain. It's not just a matter of, well, it's just a new drivetrain. Like I think you had Albert, I believe his name's Albert, right? you and Emmett interviewed him from a few months ago. He had very good bear arguments, but I wonder
Drew
how
Dixon?
much of those Drew Dixon. I'm sorry, I don't know why I said Albert.
Albert.
Yeah, Drew Dixon. Sorry, I don't even know why. Isn't it?
Albert's not even close.
I'm just not. I'm just a moron. Forget it. But Drew Dixon. But I wonder how many folks on that camp are looking at this equation of, say, competition and everybody else who's trying to scale up and getting to that point. And are they looking at these channels? Like, for example, Rivian as well is going on a partnership with Mercedes where they're going to be providing the drivetrain and the batteries. But how much does this part of the equation impact their ability to get to that level, right? It's just fascinating because it seems like at least within certain circles in the Tesla community, I think really a lot of folks in the Tesla community understand, I think are much more well versed from the standpoint of scaling and what the supply chain needs to do in order to satisfy the long-term goals versus, well, we're just going to get there. The automakers have been doing it. It's just a different kind of drivetrain. They'll figure out the pieces, but will they really? I don't know. I just find that very fascinating.
Yeah, I think a reasonable bear argument and something that the traditional OEMs are like terrified of is building excess capacity because that's how auto companies go bankrupt. And so like I think it's at least the reason I say it's a reasonable argument is because like you could imagine that if Tesla builds out supply for like 4 million models.
Matt, we lost you again.
Cut price. Drop off again.
Now you're back.
Okay.
You're back now.
Now I'm back. All right. So like you could imagine like if there's just like a huge overbuild of Model Y production because demand is so great right now, but then like you double and triple it, and then in 3 years' time, the demand just dries up a little bit. I don't think this is going to happen, but if that did, like, and you run that through what would happen to their financials, it's like a disaster, and that's like how auto companies have gone bankrupt in the past. And so I think a huge hesitancy that you're seeing from the traditional OEMs right now is that they don't really want to stick their neck out too far on like these long-term battery supply because it's like, well, what if EVs don't really take off? I don't want to be stuck with this. But Tesla, like on the other hand, is going out and vertically integrating on like the battery supply side. And just like, I think there's a really interesting mini case study of like the difference in philosophies between the companies. If you look at what happened during COVID with like the chip supply. So like chip supply was getting tight. Auto companies were really concerned that like, demand would be drying up because the world might be like ending. And Tesla's like, nope, like we'll buy all of your chips. We'll sign long-term contracts right now. We want as many as you can give us, and we'll put our balance sheet behind it. We'll have contractual guarantees for you. Just give us every single chip you can get. And so if you're the supplier, you'll be like, well, great, I'll take the Tesla deal. And so like you fast forward, 12, 24 months, and you can see like that was a huge victory for Tesla. Like they had their supply when all these other companies had their plants shut down. And so I think there's going to be a similar dynamic where Tesla is willing to kind of stick their balance sheet out there to secure the supply in the very long term. And the other companies are just like, Panasonic, please try to like provide me with some cells when I need them, but I'm not going to sign like a contract for 2026 or anything like that for like 1 million vehicles. They won't do that. So I think they're going to, like, if they can get the cells, they're going to be paying more than Tesla is. That's for sure.
And I think that hesitation is ultimately what's going to hinder or kill those traditional OEMs, right? Because they're not willing to fully commit and they're not sure. And they're still like, well, maybe we'll hit this target by this, like it's not like Tesla, who has openly said 20 million by 2030, right? If you look across the board at the other targets from the other OEMs, they're just a fraction, like 10%, 5% of the same numbers that Tesla's aiming for, right? And to your point, when they go to those manufacturers and they create those deals and they talk to the supply chain, Tesla's coming in with more purchases, right? They're already the biggest buyer of batteries in the world, like longer term contracts, bigger contracts overall. And Jesse from Now You Know said something similar about like, if there's a battery breakthrough, guess who they're going to first? Like they're going to the person who has already been buying the most from them, right? And that's Tesla. Like, so Tesla already has this huge advantage versus all the other OEMs because of that.
the risk of putting your balance sheet out there in a contract for supply 6 to 12 months in the future. So the very interesting dichotomy about that is that 2 years ago, not even, 2018, 2019, when Tesla's balance sheet was looking a little bit more sketched than it was today, then a lot of people would have been very, I think, afraid, or they would see it as an extremely risky move because Tesla didn't have the level of profitability that they had today. They still had a lot of ramping factories. They just weren't as secure, and they had much more debt than they do today. Now in 2022, if you compare their balance sheet to every other automaker, they are by far the best positioned ones to take their balance sheet and leverage it for supply 6 to 12 months down the road. So whereas a Ford or a GM, whom have a lot of, those companies have a lot more debt, and their cash to debt ratio is much worse off than Tesla's. And as a ratio to their total business, they have less cash on hand than Tesla does, right? If you view it from a per vehicle perspective, Tesla has what, $18 billion in cash, 16 or 18 billion in cash. They sold 1 million vehicles last year. Ford and GM are around the 20 billion, maybe a little bit less. But they ship 4 to 8x more cars. So it's very interesting to think about it. So Tesla is now in a position where they're in the best position to be able to take those risks into the future of securing the supply. And for the companies that have the most units sold every single year, they're in a less advantageous position to try and secure the supply moving forward. It's almost like a self-fulfilling prophecy of why having such a bloated company is a problem when you have to innovate into future technologies. It's like the innovator's dilemma perfectly encapsulated in this exact situation of this lithium deal, right? And the supply. I don't know what you guys think about that, but that's where my head goes when we're talking about this topic. It's crazy.
Yeah, no, I mean, it's very true. I mean, like, these other companies, like, I worked at GM for a couple summers as an intern, and gosh, it's just so sleepy and it's so bloated. And like, I just remember the meetings, like meetings upon meetings, and then there's just like a lot of like goofing off, and like I had a fun time there, but like I was it could not be more different than like the culture that you described, Farzad, when you were there, and just like I had an impossible goal, and so I just had to do it, and like somehow I found a way to do it, and like stretched you like beyond what you probably thought you could do. And it's like the exact opposite of the culture that these legacy companies have. And yeah, it's just Sandy Monroe, who's like bobblehead is right up behind me, like he talks about this all the time. It's just like, they don't know what they're talking about. Like you get a couple MBAs in there and they think that they can squeeze a couple pennies out. And like, he's completely right. Like there's so much like O&M that's just wasted there. It's really frustrating.
Don't save me any money, says Sandy. I totally am in agreement with that. For me, I look at the posturing that happens, and like it drives me nuts to think of like how, there's a lot of talk and not a lot of walk yet as far as the OEMs and what they're creating and doing. I know with that, I keep in mind, really, for me, it's like, who's going to ramp their cars, their EVs to 1 million first, right? Like who's going to mass produce vehicles, not at the tens of thousands or even the hundreds of thousands, but like at the millions, right? And so once we get to that mass scale, then it's a question of who's going to have the highest profit margin. And to me, Tesla's the clear winner of both of those. And when you multiply the number of vehicles by the amount of profit, like it's just going to be incredible.
Well, that's one of the surprising things to me, though, is just like how efficient Tesla has become in their manufacturing. Like when I was first investing in the company back in 2017, I heard Elon talk about wanting to leapfrog Toyota, which has like this vaunted, Toyota production system. It's like a whole case study. Like companies all over the world try to implement it, and it's like a very big deal because they've been like best in class at like profitability forever, since the 70s. And Tesla just like went from highly unprofitable to like, I think they matched Toyota's operating margins like early last year, and now they're like a solid 10% above them. It's ridiculous. Like that sort of like how quickly they got to that position of leadership and like the measure by which they're above Toyota's profitability is insane. Like it's much better than I thought was possible, 5 years ago. And they haven't even like FSD take rate has been decreasing all this time. So imagine when they've got like that much profitability just on their core manufacturing operations, and then they start selling like FSD with a 40% attach rate, and Robotaxis become a thing, and then Optimus is right around the corner. It's just like it shouldn't be possible, but like here we are.
It's pretty wild.
Go for it. Go.
Good. No, please.
I was going to say, I kind of think of like a visual of like maybe a rope that's on fire, right? And it's trying to catch up. It's like almost that's the supply. And then the demand is the wick and how long it's growing, right? And so the demand just keeps growing no matter, and the supply might be getting faster, but I don't know if it's ever going to catch up. Like if you think of the next 3 to 5 years, and like Tesla's, even with them building out building out Austin and building out Berlin and Shanghai, like I don't know if they can build it out fast enough to meet the demand that's out there right now. And I mean, that's obviously why the prices are so high. And Elon's said that they're embarrassingly high right now, but it's hard to lower the prices with so much demand.
Yeah, the one sentence. Yeah, sure. So the one thing you said, Noah, was how I'm looking at the competition, and I'm seeing which one can get to 1 million EV units first. So I just pulled up the Mach-E, which is the second best-selling EV in the States by a far margin. And right now, so as of April 2022, Ford was able to sell about 3,800 Mach-E's in the U.S., right? Compare that to the Model Y, and I'll do that here in a second. Like how do you get from 3,800 a month to what's probably going to need to be, call it anywhere between 400,000 and 500,000 a year, right? So that's going to be at least a 4x, and on a yearly basis, way more than that. Maybe an 8x, depending on how, because it is seasonal in a way. And of course we're coming off of COVID and stuff like that. It's just fascinating. It's so fascinating to watch that the closest automaker, I think right now globally, that's near Tesla, that is not Chinese. And like that's the other thing I think about too, is like the Chinese are coming. I'm curious to see how they're going to enter the market. But right now it seems like, I don't know if it's going to be Volkswagen or BYD or Baidu or whoever it is, whoever else it's going to be. Yeah. Anyway, I just wanted to put those figures up because I wanted to put it within the context of where Tesla is today.
I think when China starts importing, there'll be a high tax tariff that will help pay for the EV incentives for the U.S. based automakers.
I think it's more likely that the U.S. OEMs are going to announce 20 million new EVs, like just like different models, and they'll actually build 20 million by 2030. Like
that's their strategy.
What was it, like 30 EVs, I think, or 20 by 2023, I think. And it's like, here we are. And like, it's just, they're not doing it with any kind of meaningful commitments to actually achieve these targets. And I think because they're skeptical that the market's actually going to be there. And like, they don't want to stick their neck out, but you have to stick your neck out if you're going to survive this and make this transition work. Like, more credit to Ford. They're sticking their neck out more than GM for sure. But man, I think a lot of companies aren't going to make it.
I find it hilarious that GM's strategy is, oh, we'll make 25 different models and we'll make like 3 of each of them or whatever, whereas Tesla's like, oh, we'll make 4 models and we'll make millions of all of them. So, and they'll be at the highest profit margin. Yeah. Just like if you actually think of that one little factor, it's like a no-brainer of who's got the better strategy.
Yeah. Yeah, but like that's just like the legacy thinking is like people have always segmented customers into these traditional brands of like the CUV and the SUV and the sedan and the subcompact, and you need like a certain number of each one of them, and you want like low ends and high ends, and then like your premium, like Cadillacs and Lexuses within each category. And that's just the playbook that like it is known that that's what you do, and so that's what they're doing. But it's not like the world has changed and they didn't notice.
Yeah. Real quick, I have a thing up on the screen. Somebody in the comments was talking about BYD and looking out for them. Let me see if I can find the comments here. But by the way, if anybody has any questions that they want the panel to address, just put question before your question, and then drop it in the comments, and we'll look to address them. But BYD, and I also like to get your all's take on Chinese auto manufacturers as well, and how you guys view them entering the U.S. market at some point. So BYD has 6 vehicles, I guess, 6 electric vehicles. I'm looking at their production for, I believe this is 2022. Yep. So this was published August 7th, 2022. Inside EVs by Mark Kane. I think this is year to date, I believe. Or maybe not. I gotta read through this a little bit better. But half of the vehicles that BYD produces are hybrids, and then the other half are electric vehicles. So 81,000 electric vehicles, 81,000 hybrids. So I'm just curious. So if we extrapolate this out to a yearly number, I'm trying to figure out if this is monthly or quarterly or what. I can't find it.
I don't think that'd be monthly. That's a lot for a month, isn't it?
At the current rate, BYD is basically producing close to 2 million plug-in cars.
No, that's
per
right.
year.
That is monthly. Yeah.
Okay. So 162,000 monthly in China, which is that's a really good, number. You extrapolate the BEVs out to a yearly, that's about 1 million, right? 80,000 times 12, that's roughly 1 million.
Yep.
And I'm going to pull up their website real quick to see what their product lineup looks like from a cost perspective, because these are like the automakers I'm still getting familiar with. I know what BYD is and I know what they're doing, but I haven't dug in nearly as deep as I did with Tesla, and I'm almost doing this like live on the screen here. But how familiar are you guys with BYD, and do you guys think that this is going to be a true competitor to Tesla, or are they going to enter the auto market? I don't know if you guys have any opinions on that, but I'm just throwing it out there because it does seem to be a topic in the comments.
I think it's like the Android version of the phone. Yes, there are people who like Android, and there are going to be people who use it and think China can produce some great EVs overall, just like there's some great Androids out there. But the number one selling phone profitability wise is the iPhone. And I think it's even with China's lower labor costs and lower design fees, I think overall the Tesla's still going to make cars that are more profitable.
Yeah, like I hope BYD makes it, honestly. I'm not as familiar with them. I've definitely dug in. We had Taylor Ogan on our channel a little over a year ago, I think, and he's a big proponent of BYD and all the Chinese EV companies, honestly. So I think we need more competition. Like Tesla can't just scale up to 100 million vehicles per year. So I do think there's just going to be some people who don't like a Tesla, who don't like the modern contemporary feel of the inside, how minimalist it is. And so I'm all for some other companies coming in and supplying different niches that Tesla isn't covering. One of the ones actually that I got to drive when I was at the Monroe and Associates there was this Chinese EV which I hadn't heard of before, called Skywell. And it was just a pretty basic, it reminded me a lot of a Jeep Cherokee or something like that. It wasn't particularly fast. The user interface wasn't amazing, but they were kind of saying that it would be priced around $30,000. And I was like, okay, at that price point, I think they'd sell a lot of these. And it's nice enough inside that I think people who can't afford a $60,000 Tesla would say, yeah, this is a pretty good alternative. And so I really hope that there's some more entrants that kind of, go with kind of more basic price entry points. And the other thing that I thought was kind of nice about this was the interior didn't look like an EV. It looked exactly like any kind of Jeep Cherokee or whatever that you would have driven in your life. And so I think there are just a lot of people that are kind of intimidated by the touchscreen or just don't like it. And I think having options for them is a great thing.
I think if there's any sort of saving grace for traditional OEMs, I think it's if they revamp and go backwards in time and basically take their classic cars from the 50s and 60s and so on and turn them into electric products that are brand new. If you had some classic cars that are sold, that would be a one way to get some sales going for them.
Yeah,
I was like
it's interesting.
visiting these manufacturers from China because whenever they translate to English, like some of the words they use are just so fascinating. Like the first strategic SUV, what does that mean? Like what is that? And I'm not, I'm trying not to poke fun, but I'm like, I'm just, it's very interesting. Sort of, you can tell all around health and
Yeah,
pleasure cockpit. Cool. What?
that sounds
That's
dirty.
neat. It does, doesn't it? All around
I don't
health
think you
and
should be
pleasure.
driving in a
Ooh.
pleasure cockpit. Um, no,
This is
that's
the car
funny
you were
part.
talking about, though, right, Matt? Yeah.
Well, it's actually
Was this it?
not. I mean, that's a way more kind of futurist modern design. I
Okay.
don't know exactly what model it was. Skywell's the company. So yeah, it was a more kind of basic. I don't know. I could probably dig it up in my pictures somewhere, but
That's okay. Yeah.
it was just like a very normal looking car, and it's like, oh, it also is electric, and I could see that being very attractive to a lot of like middle income or lower income people even. Especially with the tax credits. Like that's, if you have like a $30,000 car in a $7,500 tax credit, which obviously being a Chinese EV, that it wouldn't be. But like, I think we do need some kind of lower price entry points if we're going to, really kind of move the needle on EV adoption. And I think that like a lot of people, when they get like they say, okay, I can't afford the Tesla. Yeah, that's it. Imperium, I guess.
Yeah. Doesn't have a frunk though.
Yeah, so it doesn't have a frunk, but like, if you're not comparing it to a Tesla, maybe you don't care so much.
But why wouldn't you compare it to a Tesla?
Because you could like if your budget, like my brother-in-law really wants a Tesla, for example, but like his budget just does not allow for that. So like he's looking at all the different options, and like he's looking at a Bolt, and he's looking at some of these other like some used vehicles too, and so like there's a really sizable portion of the car buying public who probably would buy a Tesla if it was priced a lot lower.
Yeah, I agree. And my brother has a Bolt as well, and he loves it. I've driven it a lot as well. It's a great little car. I think just as the price comes down, I think the number I heard is for every $5,000 lower you get twice as many people who could afford it, right? And so Tesla's already sold out at this higher price, so they're working their way down. But like you're saying, if there's somebody who can come in at a lower entry point, maybe have shorter range and make other compromises like that, then obviously that's something that Tesla's not there yet. But that's also why I think there'll be a huge step change if and when they start putting up the $25,000 car. I think it's going to be more like $25,000 of cost to Tesla, and I don't think they're going to even sell that car. I think if they figure out FSD, I think they're going to wait to figure that out first, FSD, and then basically use that as a fleet car.
Got it.
Yeah, I mean that changes the whole dynamics.
Pulling up Tesla price real quick, $299.10. We might break 300 here by the end of the stream. And the reason why it's going up is because of us. Obviously, it's because we're having this discussion. Clearly, obviously, that's why we're going up in stock price.
Why did it say 414 on there?
Where?
On the axis on the right, it's like 299, but it looks like it might have touched 414. Oh, that little purple box on the side.
I think I have some. I drew some lines.
Oh, okay.
I was doing some. I think.
Yeah. I will say one more quick thing. Like, I know Kathy K just said GM is slow to launch the new $30,000 car. I think GM might launch a $30,000 car, but they'll sell like 1,000 of them or 10,000. Like nobody's mass manufacturing that car. Like I said, nobody's ramping to 1 million cars at $30,000 that are EVs because they would basically go bankrupt. Like there's little to no profit, like even at their higher priced cars. So like if you think of, if they can't make money off of a $45,000 Mach-E, how are they going to make money on a $30,000 car unless the specs are just atrocious?
Yeah. So a comment here from Yashu. Question: how are you all so good looking? I don't know who you're talking to, bro. Is it Noah or Matt? Which one? Both? Yeah.
He's got a mirror
Welcome,
up,
Yashu.
so he's looking at him. No.
What a stud. Go subscribe. Hit that bid. Hashtag hit that bid. Go subscribe to this gentleman.
So does that mean we have no power hour at like 3:00 today then? Since he already live streamed?
Yeah, I think he's I think he's traveling. I think he's traveling today.
How dare you, Yashu?
Yeah, no breaks, bro. Come on, it's Canada. Question. What are your thoughts on tax changes to reflect EV contributions to roads and infrastructure updates, replacing gas tax contributions? This is an interesting question because is there a mechanism today where EV drivers pay for the roads where we used to pay for the roads through gas? Like, how does that work today? I don't know if either of you guys know the answer.
I know a lot of... Oh, go ahead.
Go ahead.
Noah.
Rock, paper, scissors. I was going to say, so I did hear that if you look at the since like the 90s, the amount of allocation because of gas tax has diminished. And so even though that was true, pre 90s, it's less true today where there's not as much tax being taken from the sale of gas to help with the road infrastructure. So that money's coming from another part of the budget. That's what I heard through a YouTube source, so I don't have that verified or anything, but I don't know, Matt, do you have any other insight?
Yeah, so I know one way that a lot of states are trying to do that is by charging much higher registration fees, like annual registration fees for EVs than for like comparable ICE vehicles. So that's one way that I think is probably prudent. But like the other thing, just with the gas tax, is like that system is broken already because you have politicians like Congress, I believe, needs to approve the increases to the gas tax, and every time that comes up for the vote, they're like, "No, I'm going to protect my constituent. There's no way I'm going to do that." Well, like you've also at the same time, Congress imposed these CAFE standards, which greatly increase the fuel economy. So like the amount of tax that you're collecting per mile driven is really decreasing because you're forcing the automakers to be more fuel efficient, but you're not raising the price or the tax per gallon. So like that system's falling apart, and Congress doesn't have the political will to address it. So I don't have a great answer, but it's like, again, it's just like my lack of faith in our political system right now.
I will also say that if you look at the budget overall of U.S. spending, I think it's still like 45 or 46% of all government spending is in the military. And the stuff that usually gets put into the news and what we talk about like in the media is usually less than 3% of that budget allocation. So it's really kind of frustrating to me to see so much talk about so small of a percentage of U.S. spending comparative to the other things that are being spent. And another thing, my dad works for the government. I have family and friends that work for the government. I have a government contract for one of my projects at work. It's not the most efficient system. They're not designed to be efficient. They're designed to make sure there's checks and balances and everything is set up the way it's supposed to be. And so efficiency goes out the window and with the government, unfortunately.
There was another question I want to address here. So have you heard rumors of Palantir and Tesla working together? If this is the case, what do you think this means for big data for Tesla outside of Dojo? I have heard the rumor, but I would be surprised if Tesla decides to partner with a software company because they have the chops, in my opinion, to build anything that they need from a software perspective in-house. And I experienced this while I was working at the company. Tesla just wants to do everything themselves because they believe that it's the most cost-effective way of doing it. And if you're going to have all that talent anyway, why would you want to go out and spending a bunch of money on Palantir? And what's interesting about Palantir is I've actually, for the last couple of months, I spent quite a bit of time trying to figure more stuff out about that company because I was getting asked all the time, what do you think of Palantir? What do you think of Palantir? So I spoke with Tom Nash. I spoke with CodeStrap. There were a couple other things I tried to do to really dig myself deep into the company. I don't know if that sort of solution makes sense for Tesla. It does seem like it's very costly and there's a giant learning curve for it. It does seem like a very good product, but the value proposition to Tesla is dubious, especially that they have the talent that they have internally where they can just whip something up themselves. So I don't know what you guys think about that, but that's how
I completely agree with that. I mean, like I think back to a couple of years ago when they just rewrote the entire code for their Fremont factory. And I was like, that seems like something that most companies would outsource. Like it kind of surprised me. Then I was thinking about it. It's like, well, yeah, like if you've got the incredibly capable software talent that Tesla has in-house, then it kind of makes sense to turn them loose onto solving and like optimizing all these different problems. And so you're getting real-time information instead of like somebody on the line saying, hey boss, like I ran out of bolts, can I like get some help over here? Not saying that that's what the current state of affairs was, but like just having much better like optimization, like that's Tesla's game. Like that's why they're so profitable. So I would be completely shocked if they actually like contracted with Palantir.
The only scenario I can see that being the case is if there's something proprietary or something special that Palantir has that would save Tesla time, energy, and resources, I guess. But like to both of your points, the engineering side, the software side, Tesla has a great leverage from that, like with their team. So yeah, and unless Elon sees something similar to what Twitter might do for X.com, like I don't know if they would go with them.
Yeah. Yeah, I don't see it. I don't see it. And I know there's a lot of Palantir fans out there, and they have a very strong community. I'm not saying the product is bad. It's puzzling to me how that company is approaching their go-to-market strategy. And I think they're way too banking on themselves to be like a Tesla product where, word of mouth will drive their sales. But the problem with that kind of product is that it's extremely complex, and you're specifically working with very technical people to implement it. And most business owners are not technical. So I think that's why they're struggling to gain traction. It's because they're trying to sell non-technical people a very technical product. It's very, but they're like super diligent. They're very sort of hunkered down on the fact that, well, we're just going to allow our product to speak for itself, because like, okay, well, you can't do that though, because it's very different. Like Tesla has the benefit of people can sit down in a Tesla and they get it. If you take a business owner, you put him in front of Palantir or Tesla or whoever, and then you put him next to Snowflake and any other product, it's going to take like 10 hours for them to understand what the value proposition is. Most humans don't have more than 2 hours of an attention span when it comes to that stuff, especially when you're not speaking their language. So I don't know. Actually, I'm kind of concerned about Palantir's long-term survival, but that's just me. Sorry, Matt. I wasn't sure you were going to say something.
Yeah. No, I definitely resonate with everything you just said. I mean, like I'm just thinking of my own days when I was managing a fleet of wind farms. Like at one point I was just like doing so much of the analysis and like tracking by myself. I'm like, I need like some automated solutions to come in here. So I was talking with vendors, but it was such a laborious process to like see what the benefits were of each one of them and like vet them and then be like, okay, well, it's not like they're just going to do all the work for me. It's like I've got to learn their system and like use their tools, and there's drawbacks with doing that. So I mean, just from my own experience, it's hard to I would imagine a company like Palantir is going to have a really hard time kind of sustaining a high growth rate that I think they probably need to sustain to justify their valuation.
I agree.
But I'm happy to be wrong on that. I don't have a very strong conviction level on that.
Yeah. Jack, it seems to me that delivery time has so much dropped that currently, oh boy, it seems to me that delivery times have dropped so much that there are almost no sales happening in the US. Delivery has shrinked with at least a month, which more or less means slow. Maybe so. Is this a comment, Jack, around delivery times being lessened? Hey, I'm thinking that's the case. Noah, you were talking about how you have a Model Y on order, but I don't know if I don't know if you guys can answer this question. I'm a little confused as to what.
Sure.
Jack is.
I think he's saying that like the orders, like there's less hitting the queue, so the wait time is lowering or shrinking. I think that's definitely going to be true. So when I initially ordered my Model Y for my wife, it was in March. So our delivery window was originally August, and then they hit us up in July, and they're like, "Hey, it's ready." And I was like, "Oh, I didn't quite get my finances in order to pull the trigger yet. Is there any way we can delay this?" And they basically said, "Yeah, we can basically do 180 days after your order date." Right. And so that's like August 4th or 3rd. So I hit them up like first day of August. I'm like, "Hey, we're ready to take the order." And they're like, "Okay, great. It'll be December." I'm like, "Oh, okay. I thought it was going to be a couple weeks." And so since then, they've given us a delivery window from like November to December. Now it's rolled back a little bit from October 28th to December 9th. But from my research, until you have a two-week window, you're really not as close as you think to when they'll start delivering it. But to Jack's question and point, it might be changing, right? If there are people who are pushing off their deliveries and they're trying to figure out if they can hold out until January 1st for that $7,500 credit, it would definitely be worth it for a lot of people. So I'm kind of curious to see what Tesla's strategy is with that. Obviously, that's a little bit of inside baseball, and we won't know unless we hear from somebody directly on how that's going to work. But yeah, I'll keep you updated as far as what I hear.
Yeah, I wonder how much of it is
just
just a reflection of higher production. Sorry, Matt, go ahead.
No, I was going to say like two thoughts on this. One, they do have this kind of end of quarter push, which they always do, where lead times are very long at the beginning of a quarter because they're either going to export or they're going to, like, they're kind of building up cars to go to the East Coast in the case of Fremont. And then as they get closer, like the delivery times, especially if you're looking in California or close to the plant, get a lot shorter. So that's just like a ebb and flow that is seasonal, that is, I don't think should be surprising. But the other thing that I think is pretty interesting is Troy Teslake has been doing some pretty good deep dives on this lately. And while it does definitely appear that the backlog is shrinking, it still is about 3 months in terms of production, which I think is kind of like the envy of the whole automotive industry, to be honest with you. But the surprising thing to me is that, like, the U.S. backlog has remained relatively stable. Where it really is shrinking is in China, and I think there it's primarily a reflection of the fact that you've got the plant ramping so ridiculously high right now that they're just able to kind of chew through more orders, and presumably they need to export less to Europe as Berlin ramps. So I think that's something to keep an eye on, probably more closely than, like, does the U.S. credit starting in 2023 kind of hurt demand for Q4? In my mind, the bigger kind of strategic concern is there enough kind of demand in the Chinese market for, like the run rate that they're kind of cranking out right now, or will they need to lower prices, or are those just going to be exported to other markets? I mean, you've seen them starting to open up, like Singapore and a couple other places I've seen recently. So I think Shanghai will remain the export hub, but it's unclear to me, like, how like where all that supply is going to go.
Yeah, I think basically Tesla's planning ahead, and they probably already have a strategy around this. But my thoughts are the U.S. production, they'll start to push in other places, whether that's Canada or maybe even, I don't know if they're considering shipping out from, exporting from the U.S. over the next 3 months, like just to help with that, temporary demand shift, right? Or whatever you want to call it. And then as far as like China goes, I know their delivery windows have shrunk to like 1 to 4 weeks, right? So they're obviously delivering in China and not exporting from China as much. So, but yeah, interesting conversation for sure.
Yeah. And as far as that, if I could just jump on one more thing before we go to that question, I like Matthew in the comments says that prices will go down incrementally as supply increases, and then that will cause like an influx of orders. And I do think that that's likely. When I'm modeling out, for my earnings for next year, I'm assuming price decreases starting in Q1. That it's possible that might not happen, at least in the U.S. because of the tax credits, but I think for the rest of the world, it's probably a reasonable presumption. So I think we shouldn't be shocked if and when that happens, because Elon himself has kind of said that, like, that's what they need to do. So I think that's a good thing, honestly, and I'm fully expecting that, in the next 6 months or so.
Yeah, I agree with that statement fully. There was a question here that I had highlighted
from TeslaFi, I think, right?
Cybertruck one?
Yeah. Your thoughts on Cybertruck starting price? I did a whole video on this. I think it's 60, 80, and 100. So 60 is base, 80 is mid, 100K for the top range. Curious to hear y'all's thoughts. How do you think about it?
69, 420.
There you go.
Yes.
I've been waiting for this question. No, I am excited about Cybertruck for my business and what I do too. So I'm super curious about this question and how it shakes out. I think they're basically going to introduce a quad motor option that negates all previous pricing options. And so the folks who have pre-orders, they're going to give them the offer, or the option, I should say, to order that higher end Tesla. I think it's going to be 120, something like that. Almost like a Cybertruck Plaid, right, with a quad motor. It's going to have incredible specs. It's going to be tough for me to decide whether I'm going to go to that level or stick with the tri-motor that I hope for. To me, it's all about towing and range. And for my business and what I do, I need that range. So the quad motor is less relevant to me because I think the torque and the towing capacity and everything from the specs from the tri-motor fit what my needs are. But if I have like a 2-year difference between ordering a quad and going with the tri-motor that I had on pre-order, that would be a really hard decision, but I think I would have to take the quad.
Right.
Yeah, I mean, I don't have. I haven't really thought about this in detail. I think I've assumed something in the model. I don't know what I put in there right now, but they're certainly going to increase from when they were debuted. Was it 2019? I think. So yeah, they'll definitely be higher. I mean, I think as far as the kind of price points you laid out seem about right to me. So it wouldn't surprise me if it's something like that.
Yeah, I definitely think they're about right. I just don't think they're going to offer anything less than $100,000 for. They have a 1.2 million on back order. So as they ramp up, like I would be surprised if they pushed out more than 500,000 vehicles by like 2025, 2026 for the Cybertruck. Like if you look at the ramp of the other models and how they've increased their specs, I wonder if that will be comparable or if Tesla will be able to increase that ramp of Cybertruck faster because there's no paint and how they've redesigned it from an exoskeleton. But I think at first they're going to have harder challenges, and then over time it'll be even more fast. The curve will be much faster for their output of Cybertrucks.
I think what's interesting about the Cybertruck equation, though, is that Elon, and I don't know if this strategy has changed, but he did mention when they unveiled the truck that they have to figure out how to make the truck, from a cost perspective, cost less to manufacture than a Model 3, but offer the same sort of utility as a pickup truck would. I have a chart that I pulled up. So this is the video that I did a month or two ago, whatever. So within those price points, how it would stack up to the most recent pricing for pickup trucks. And so this is sort of like an overview of what it would look like. I do feel like if they go over $100,000, like what would separate Cybertruck from, say, a Hummer EV, right? Or like a Hummer top of the line car. So the EV Edition 1, the Hummer is $110,000. The EV3X is $104,000. It is a gigantic car has like a 200 kilowatt hour battery pack. It's 9,000 pounds, and it's built very inefficiently compared to, say, a Cybertruck will. So why? And like I'm half thinking, why would the Cybertruck even need to get to $100,000 for the Plaid, except for the reason that Tesla can, right? So. And I've been battling that thought too for a little while. It's like, is it really going to be 100,000, or are we going to be surprised from a cost perspective once Tesla comes out and says, "Here's a truck for the people. It looks crazy and it has a lot of usable functions, and the top of the line model is 65,000 or 80,000." I don't think that's going to happen, but why? Why wouldn't it?
Yeah. I'm hoping. I agree. I wish that's the case. I'm going to play devil's advocate. We'll have another friendly debate here.
How dare you? Go ahead.
My thought is just like with other Teslas now. So like you buy a Tesla, you could literally the same day you receive the delivery, you could turn around and sell that car back for $5,000 to $10,000 more than what you paid for it. So the first Cybertrucks, just like the first Rivians that came out, people are flipping them for 20, 30, 50% of the original price, right? And so that money is going to those what are they called? Markups?
The flippers.
The flippers, yeah. So
arbitrageurs.
Yeah. So since Tesla is a for-profit business, right, and we're shareholders, I think it's almost their obligation to raise prices in some ways because of that. So if the demand is so high, and that's what we've seen, like based off of the current models that are out, like they almost have to raise the prices, even though as a consumer, I would prefer to have my $70,000 truck, which is way more than I've ever paid for a car to begin with, but I also understand that the demand is just ridiculous. And I could guarantee, I can almost promise you that the first 20,000 trucks or whatever, like there's going to be a large percentage of people, or I would say, a significant percentage of people who are going to flip those cars for, $150,000, $200,000, because it's just such a mind blowing truck, a new car, a new concept.
Yeah.
Yeah, I agree with what Noah said. I mean, I think they're going to try to price discriminate as much as they can, and it just makes sense in the early stages of a product ramp, especially that you're going to have your worst margins at the beginning of that ramp. So it makes the most sense, just from a financial standpoint, to sell your kind of highest priced, highest margin products at that part of the ramp. And then hopefully the kind of longer lead times will convert some people who maybe would have preferred the like more slimmed down version to just opt for the higher one anyways. And so that's kind of a good way to price discriminate in a way that is very strategic and makes sense. So I suspect they'll do that. I mean, like you saw them kind of do that with Model Y. Like remember like the rear wheel drive Model Y that they unveiled? You can't buy that in the US right now. It's like it's only dual motor options. And I think when their demand is just so high, that gives them the power to make those sorts of decisions that are, just make the most business sense for them. And I think they'll do the same thing with Cybertruck.
So then I guess the assumption here then is that Tesla could sell Cybertruck for 50% margin plus, if we're thinking about this correctly.
Oh yeah.
Right.
Well, not the first models like Matt just said, because obviously they have
once they're ramped.
Yeah, once they're ramped. And honestly, I think basically they raise the prices until they hit that ceiling of what the demand is, right? And I don't see the demand running out, right? They're going to basically push that number up until they hit that top, and then they're going to basically slowly bring the price back down to match the demand, if that makes sense. And as the price comes down, that increases the demand as well. Does that make sense?
Yeah, but I think what's interesting about that too, though, is that if you look at the pickup again, maybe we shouldn't use like the current market to dictate what it's going to shape out to be, but pickup trucks generally have been the profit drivers for automakers. Like the reason why Ford is in business is because the Ford F-150 makes them a ton of money. So if Tesla's going to take that market and they're going to put in a manufacturing process that's going to reduce the COGS by 15 to 20% for that vehicle, and then they're able to charge a Tesla premium, why wouldn't that get you to 50% margin for the life of the vehicle, right? Unless I'm thinking about this incorrectly.
Yeah, I mean, it really comes down to like if they could produce, say, 5 million Cybertrucks, and the demand is, say it is 5 million or not. Like if the demand is 10 million, then obviously they can keep those higher margins. But I mean, I guess the other thought too is like if there is no true competition, like the Ford Lightning could only produce say 500,000 vehicles.
But even with competition, Ford F-150 is still generating a ton of margin, right? I mean, the truck market, it has a lot of competition, but they're still the highest margin getters in the car lineup. And I didn't mean to interrupt, but like
no worries.
Yeah.
They could still have margin and still sell, but if they're selling 500,000 versus Tesla's 5 million, like I think that's the difference there. And really the bottom line for me is over the next 10, 15 years, like the transition from gas cars to EVs, the rate of turnover for those cars is going to be higher. So I think every car, despite its price point, is going to be sold by the people who can make it.
Matt, do you have any thoughts?
Yeah, I mean, I basically I've just been mulling over in my head 50% margins, and like the valuation nerd in me wants to say it's not possible. Like when I was doing investment banking, we were selling these automotive companies for 4 times the EBITDA, which is like ridiculous. I mean, it's like commodity pricing. So that's like kind of where my background comes from. So just thinking about like a hardware product with a 50% gross margin, it's insane. Like I think it's easy for us to like throw around these numbers and just be like, well, yeah, it's Tesla, it's Elon Musk. Like dude can land rockets on the ocean. Of course, like 50% gross margins are possible, but that is so nuts. Like that's why Wall Street isn't valuing Tesla the way that we think it should be right now. Cause like a lot of the bears that I've heard talk about this, they're like, well, I just don't understand the numbers. Like the margins, something about them just doesn't make sense. And so they either assume there's like fraud or that it's like something gimmicky or like, and like I have some sympathy for that because I can hardly wrap my head around these numbers that they're putting out. So like, honestly, I've just been like for the last 2 minutes been like, why is it reasonable that, or why is it possible that Tesla will not have 50% gross margins on Cybertruck? And I'm thinking about the exoskeleton and the way that they're going to put those things in there. And I'm thinking about the pricing power that they're going to have and the fact that it's already going to be in this gigafactory that they've already, built. And it's just, I can't come up with a rational reason why the price or why the margin would be less than 50%, which is kind of surprising to me. Because I like to think I'm reasonably conservative and like a realist in this camp.
Yeah, so let's do like a very simple, just mathematical exercise here, right? So this is how I think about it. And again, I could be a moron for thinking about it this way, but let's go through it, right? So Model 3, the rear-wheel drive car is $46,990. What do you think the cost of this car is based on your valuation model? What?
Well,
35? Or pull it
somewhere
up?
in that range, yeah. Well, I just went through this exercise with Emmett yesterday, so it's
The reported
I can just tell you what I put in there.
Isn't it the reported margins like 18%, or is that incorrect? I from what I remember in some report somewhere around 18% is
18% margin. Okay, so time points.
I don't know, Matt, back me up here, because that's just a number that it comes to top of mind. I don't know if that's accurate.
I'm not sure where you got that, honestly. So, I mean, I'll just tell you what I have in my number right now for Fremont Model 3, which is like one of the worst gross margin products out there.
Let's use that.
So I'm showing 21% right now with my estimates.
Okay, 21% margin. So 46,990 times what's 0.79. That's so a cost of 37,1. So it costs Tesla the cost to Tesla to make a Model 3 is 37,122. And if we take Elon's statement of we need to make Cybertruck at or lower the cost of a Model 3, let's just give him the benefit of the doubt and say at the cost of Model 3, because they're very good at executing. That's so it will cost to manufacture a Cybertruck about $37,000 at this level. What would it take to get to a 50% margin? What is the price? So divided by 0.5, right? 74,000.
Mm-hmm.
Did I do that math correctly or no? Or
yeah, I mean, it's just multiplied by 2. Yeah.
Yeah, exactly, right? So 74,000. So if the ASP of Cybertruck is 74,000, that's a 50% margin. Do you think Tesla's going to be able to sell Cybertrucks at an ASP of 74,000? It seems like yes.
Yeah, it seems like yes.
Right?
It's crazy.
Absolutely.
Like that's crazy. Yeah, and keep in mind, like if you were to go with the Shanghai Model 3, it'd be even less. Like that one, like by my model, the cost of goods sold there is like 33,000, or actually no, 29,000 on like the base version. So call it 30,000. So then like 60,000 to get a 50% gross margin. If you were to
Ishan's telling me I got the wrong math. I don't think so though.
Well,
so
it was 37 times 2, right? So it's a little over 70.
If I'm right, Ishan, you owe me $1 million, bro. Let's do it. So 74,000, right? Minus 37,000 for the cost, divided by 74,000. Sell price minus cost divided by sell price, 50% margin. Right? If it's a 50,000, here we're like blowing each other up on live here. 50,000.
This is the cost of goods sold times 2. Yeah, so it's
divided by 50,000. So a $50,000 sell price would be a margin of 26%. Yeah, mm-hmm. I think Ishan, you're thinking of markup, not margin. You might be thinking of a different formula. Just a heads up. And I'll give Ishan a little bit of crap right now because he's part of our Discord and he's been on before. So
yeah, a 50% gross margin is 100% markup, which is kind of crazy to think about it that way.
Yeah.
Mm-hmm. Yeah, I was going to say we're basically calculating a single point in time, whereas like obviously there's probably a ramp up and a ramp down, and then there's so many factors to consider that really weigh on the positive side of Tesla, like getting butts and seats. That's going to be a multiplier. The more people who experience a Tesla are going to want to buy a Tesla. The lowering of the price, right? Every $5,000 doubles the amount of people who could afford it. As they scale up both the Cybertruck and the other products, right? The cost per product that they build is going to substantially lower each time. And then the icing on the cake is the engineering factor of Tesla, of like every single component, every process is, in hours of iteration, not years like other OEMs.
Yeah.
Kathy's blaming me for putting the calculator up in the comments. I just want to
me.
clear the record. I had nothing to do with that. I'm too self-conscious of my nerdiness to put a calculator up on the screen. I was just going to do the mental math, but Farzad wanted to do it, so blame him.
It was me.
The less buttons it has, the easier it is for me to get. No.
Yeah. I think it's important to know, just going back to this 50% margin thing though, how can they even do that? Like the elimination of a paint job is a really, really big deal in the cost of goods sold. So my brother actually works for the company that does like paint filtration services to automotive suppliers. And so he's like familiar with that. And it's like almost always the limiting factor to your production rate in your factory. So like a couple of years ago on one of the earnings calls, Elon was talking about how annoyed he was that like the production rate was so slow. He's like, if you think about like how fast these cars are coming off the line, it's like Granny and her walker could actually go faster than we're getting out new cars. And he's like, we should really be pumping them out where we need to take into account wind resistance of the parts going through the assembly line. That should be the limiting factor, which is like that sounds aggressive, crazy, right? Yeah. But I think he's got a point. So like, if you're eliminating like not only a huge like cost of the painting and the huge limiting factor on your production rate, but just like a massive footprint for the paint facilities. So that's like a huge elimination of costs. That I think it's hard to because there's going to be more raw materials. Like the weight of the Cybertruck's going to be a lot heavier, so the cost is going to have to be made up on non-material components.
Yeah, and I forget the exact details of the conversation, but I know when VW was looking at what Tesla was doing with their line and how much faster they were able to produce cars, like in the same time frame, like they were like, oh yeah, we need to figure out a way to get this faster for sure.
Real quick, I was Googling the average pickup truck price for a pickup in the United States. A full-size pickup truck, which is what the Cybertruck would be. The 2020 average price of a new pickup truck was $38,000. We saw truck prices go up last year, making the average cost of a new pickup truck $41,000. So to get to $75,000, so Cybertruck would have to carry a $34,000 premium over the existing. Yeah, right. Let me see. 1 minus 2 equals. So the question becomes, if Cybertruck was able, so the assumptions are, if they are able to get the Cybertruck cost to be at the same level of Model 3, which Elon has come out and said, and if you really think about it, with the Model Y, the amount of cost that we're able to take out of that car, they've openly said Model Y costs less to produce than the Model 3, yet it's a larger car, right? So obviously Cybertruck is larger, but it's going to have a lot of innovations around the cost to produce the car. So if it does come at $37,000 some odd to produce a Cybertruck, and Tesla is able to carry a premium of $34,000 above the average truck market, then it stands to reason that Tesla will achieve 50% margins with Cybertruck. So the question becomes, what will Tesla offer from their perspective to get that $34,000 premium over the average selling price of a truck, right? That's how I think about this equation. And so what I'm curious to see once they unveil the truck fully is I'm going to look at that car and be like, is there $34,000 extra premium on this car and how they're selling it versus the rest of it? And the reason why I think they could do that is if you take Model Y as an example, Model 3, there's been a lot of data around people upgrading their cars. It's the iPhone effect, right? The people are willing to go up the price ladder to purchase that car because it's status, value for money, and brand, so on and so forth. And this is without the variable of FSD, obviously. So I'm excited. I think 50% Cybertruck margins, why not? Especially for the first year or two. And I'm curious if that gets achieved, what does the storyline become for Tesla? Tesla becomes first manufacturer ever to produce a 50% mass market vehicle, 50% margin mass market vehicle. How is the market going to react to that? You know?
Well,
do I sound too much like Yaman right now?
Fair.
No, yeah. I mean, another trend that's I've heard of and seen is like, so when people used to finance cars, it was for like 36 months. And now the window of that time has expanded, right? As people can basically pay over 72 months or whatever, like a longer period of time. And with electric cars, it's a little bit more justified, I guess you could say, because the longevity of a car, right? So like a gas car might last 150 to 200,000 miles, where like an electric car, the components are going to last a lot longer. You might need a battery refresh. Yes, that's true in 7 or 10 years or something, but overall it's going to last a lot longer. I said this on the last time I was on the show, but for me, the gas savings for the Cybertruck versus my regular truck pays for itself over the life of the truck. And then obviously there's the repairability of maintenance costing 10% of what a regular gas car would cost.
Yeah. Real quick, I do want to clarify. Somebody said Tesla will not start with 50% margin. I agree. So when I said first year or two, what I meant is first year or two after they're ramped. So let me clarify that. I appreciate that call out. Thank you. Last question. We're almost at 2 hours. These freaking conversations fly, man. I don't know how you guys feel about this, but I'm like, man. My boy Nicholas Gibbs, Investing Against the Grain. Go subscribe to his channel. It's awesome. I met him and his lovely wife in person when they came up for Investor Day. So it was awesome meeting you in person, Nick. Question: Robotaxi unveil at AI Day for the last question. What do you guys think about that? I think there's a chance, but I'm curious to hear y'all's thoughts.
I think they'll talk about full self-driving. I think that needs to hit people's world first, and I think Robotaxi is one of those things that I don't think Elon wants to talk about publicly until he's ready for it to happen, just because of all of the publicity he's gotten behind other announcements and delays and stuff. I think he's starting to change the way he communicates with people. And even though he loves to talk about it, loves to explore it, my personal opinion would be he's going to hold out until they can mass produce the $25,000 model. And to me, that means the next generation of the factories, and they have floor plans built out for if they go to expand Shanghai or expand Giga Austin, or even go to Canada, right? There's talks about that as well. So I think the next couple factories are when they're going to start doing robotaxis.
I had a conspiracy theory kind of take place in my head as you were asking this question as far as odd. So here's what I was thinking. I'll just kind of stream of consciousness this. AI in Chinese is "I," which is the word for love. And if you remember, the poster had the little love heart on the robot arms. And then I was thinking the Chinese design studio was launched like 2 years ago, right? Something like that. And they said they were going to develop a new car specifically like with the Chinese aesthetics. So maybe they introduce like the Chinese, maybe it is the Robotaxi that they were developing there. It's not clear. But maybe there's some sort of like unveiling of a new product that is leaning on AI heavily and that is related to the Chinese market. That's my kind of unpacked, like just stream of consciousness thought that I had just now.
Okay. Interesting. So you're officially predicting that Tesla will unveil a new vehicle at AI Day 2. Is that what you're saying?
And officially. I will donate $1 million to the charity of your choice if I'm wrong. That's what I agree
Perfect.
to. Yeah.
You heard it first.
My favorite thing about Matt is that he'll just lean so hard into the joke that's being made and just like freaking take over, dude. It's so funny. I like that though.
What is that like?
Yeah.
In like improv, they do yes and it's like that whole scheme. Like I'm gonna go with what you said and I'm gonna take it a step further for sure. Yeah. It's fun. Life's too short to not have some fun.
Yeah. I don't think it's just gonna be bot. I mean, a bot's going to take a lot of attention for sure. When I was speaking with James and Chuck yesterday, James was very excited about the Dojo thing and what they're doing from a chip side. So I think that's obviously going to be part of it as well. But I don't know. I just feel like I think it's time. The last time Tesla has unveiled a product that you can reserve, where you can put money down, was November 2019 with the Cybertruck. We're almost 3 years removed. It's time. It's time for something new that people can. I don't know if it's this event or another one, but
yeah, I do think so. Like getting to more tangible predictions, I do think that they'll talk more about Dojo. That seems pretty obvious to me. I think I agree with. I think it was James was saying that they're going to introduce hardware for like it's time for that for sure. So I would be surprised if they don't talk about whatever the next generation chip is and possibly some cameras too. I think probably some cameras is kind of my take. So I think it's like my takeaway is there's going to be a lot of material in there. Like there's probably going to be like a 3-hour thing, and I'm going to feel really dumb by the end of it because they're going to be talking about like all these like super complicated things that are just way over my head. So I think there will be a lot of unveils, but I agree with you in kind of the direction that you're leaning, Farzad, that there's going to be some kind of surprise towards the end, because it does seem like it's about time, like 3 years. And my conspiracy theory of like a Chinese design, like that could be.
I would love it.
I think the majority of it will be about the bot, and that will take a big chunk of it. And then a chunk of it might be about full self-driving. And then they'll announce maybe 1 or 2 factories.
Okay. Factories. Whoa, okay. All right.
Factories. Oh,
that's really going out there. Damn, okay. So we'll have you on the hook.
Yeah.
Who are you going to donate your $1 million to?
My $1 million goes to the tech relief fund of Farzad. He takes this money and then gives it to people who are in need of tech, like cameras and microphones.
Perfect. I love that. Every single one of my guests will get hooked up with the best camera mic possible. Yeah. And they'll get a 1 trillion megabit internet, which Matt, I think, needs a little bit. I'm just kidding.
My last year has just been technical issues. Yeah, I'm on Wi-Fi.
There's your problem.
We'll give you 4 Starlink satellites. That way you can have 4 times the internet.
4 times.
Is that how it works? I know it doesn't. Anyway, thank you, gentlemen. Thank you very much. I really appreciate you guys joining me today on this Friday. Matt Smith from Good Soil, Noah Sargent, part of the community. Thank you all in the comments for taking part of this awesome conversation. Thank you, Juju Gang, for coming over from Yashu's stream halfway through. Yeah, really appreciate everybody on. Matt, Noah, any last words before we sign off?
No, just blueberries aren't juju.
Damn it.
Thanks for having me, Matt. It was a pleasure meeting you, and it was a lot of fun.
Yeah, this was great. Thanks, Farzad. This is always fun to talk with you, and I love doing these.
It's my pleasure, man. Thank you so much for coming on. And yeah, we'll see you guys around next week. We'll have fun stuff. I still got to plan the week for next week, but I'm sure there's going to be some fun stuff. Take it easy, everybody. Have a great weekend. Peace out. Thank you. End podcast. Here we go.